this short video, I will be talking about the major crypto news that potentially benefits both Thai and foreigners living in Thailand. If we take a look at this article in the Cointelegraph dated 17th of June 2025, Thailand approves 5-year crypto tax exemption. Essentially, Thailand's cabinet has approved the tax exemptions on capital gains from the sale of cryptocurrencies for 5 years, from the 1st of January 2025 to 31st December 2029. It was announced on the 17th of June by the Finance Minister, and the proviso is that the new ruling only applies to profits on trades made on Thai SEC licensed platforms, for example, Upbit and BitCup, two exchanges that I personally passed KYC on. The question I have is, what about crypto purchased prior to the 1st of January 2025? For example, the wife and I bought Solana for around 1,000 baht per token a few years ago on Upbit, which is an SEC licensed crypto exchange. At the time doing this video, it's trading around 4,500 baht. Now, if I sell that this year within the 5-year period, is it tax exempt or not? Or is it only 100% for trades executed within the 5-year time frame as specified? It's important to note that this new legislation has not been published in the Royal Gazette, and therefore it's all just hot air at the moment actually. Anything can happen from now until being published in the Royal Gazette. But personally, I cannot believe what a huge turnaround this legislation is compared to the last government's stance on Bitcoin and crypto in general. Many of you will remember the nightmare of several years ago dealing with BitCup and their requirement to renew KYC, etc. I personally gave up on them and migrated to Upbit, but they have since eased up on their treatment of their foreign clients, and I was once again able to get KYC with them. In terms of liquidity, they are the #1 exchange to trade on. I was very interested to read this sentence here, that the news came shortly after that the SEC announced a decision in late May to block 5 crypto exchanges, including Bybit, OKX, CoinX, XT.com and Bybit. It's good that the Thai SEC is not a toothless tiger. In my opinion, regulation of the crypto industry in Thailand will only help the long-term reputation and support its goal to become one of the first countries to adopt laws for digital assets and taxation. Now, I will briefly discuss this article in the Nation website dated the 26th of May. Thailand explores crypto-linked credit cards for tourists. It's the same finance minister unveiling plans to integrate digital assets into domestic spending. The scheme is proposed to allow tourists to link digital assets to their cards for domestic spending. The theory is that vendors will receive payment in a local currency as per normal, and they won't even be aware that the buyer has utilized crypto. When I first read this, I thought to myself, how are they actually going to do this? My wife and I have a small business, and the KTC credit card company provided us with a standard point of sale machine. So is the government going to be working with the Thai credit card companies and integrate crypto payments on their machines? It sounds really ambitious, to be honest. In view of the previously discussed legislation that the Cabinet has approved for capital gains tax-free crypto trades for the next 5 years, why doesn't the government amend the credit card proposal discussed in this article to give the Thai vendor the option of accepting Bitcoin as a form of payment or Thai fiat, i.e. have 2 options? It makes sense to me that the Finance Minister should combine the 2 proposals and get this signed off by royal decree. In summary, I am personally amazed by the proposed legislation. The new government in Thailand is clearly pro-crypto, so I decided to ask ChatGPT what countries currently offer tax-free exemptions on profits from crypto trades, and there are currently 17 so far. So Thailand could be the 18th country. Let's keep our fingers crossed. If the new legislation is published in the Royal Gazette, I speculate that Thailand will see a large increase in expats moving to this country for that reason. Also, I believe a lot of expats living here at the moment will register with one of the exchanges, buy Bitcoin, move it to a hardware wallet such as a Trezor or a Ledger, and basically just sit on it for 4 to 5 years, knowing that they can sell it later and not pay taxes. If it actually happens, I will post another video and I'll be cracking open a champagne bottle, because I think this is hugely positive for the crypto industry as a whole. The more countries that do this, the more that will follow in the years to come. In the future, I will be doing a video on how to install a Bitcoin NOTs node on an Apple MacBook Pro. Please subscribe to this channel and support the Durian Man's educational mission. Thanks for watching.